viewers, welcome to my simple accounting channel. This is Uttam Sir. Today I have to discuss the income statement, most important stages of accounting. So since income statement is complicated, that's why I made it two part. On first part there is the income statement without adjustment, and second part income statement with adjustment. Today I have to discuss the income statement without adjustment. The taglines is given to your screen. Please make a screenshot of it. Then you have to check the solution is given in the board. So first of all, you have to draw a format, which is the income statement format. That is the 3 column. I usually prefer the 3 column income statement. First column, second column and third column. These 3 column income statement. You have to draw first. Then first of all, you have to write the sales amount or revenue amount. Where you get that? You have to get it the credit side of the tablets, which is given to your screenshot. So check it. It is 30 lakhs dollars. So it is to be written in the middle column. Then you have to find out the returns inward. Returns inward mean sales returns. So it is to be given the debit side. So find it. So it was the $5,000. So this figure is to be subtracted from the above. The figure you got, that figure is to be written outer column. Then you have to write cost of goods sold. What is cost of goods sold? Cost of goods sold not a single element. A combination of element is over there. 5 items is over there. First of all, opening inventory. It is to be given in the debit side of the tablets. Then you have to find the purchase. Purchase also given in the debit side of the tablets. Then you have to find the carriage inward. Carriage inward means sum of the transportation cost of raw material purchased. Sum of the carrying cost of raw material purchased. So this figure is to be written. And then you have to find the returns outward, means the purchase returns if it is given. So first of all, opening inventory, then purchase, then carriage inward, then returns outward, and finally you have to subtract the closing inventory. Closing inventory given in the bottom of the tablets. So look this. You to write here after sales. You to write here cost of goods sold. Cost of goods sold, first item, the opening inventory, which is to be given in the tablets, the debit side. That was the 5 lakhs. You can check the tablets. Now you have to find the purchase amount. Purchase amount is to be given in the debit side of the tablets. That was 15 lakhs dollar. 15 lakhs dollar. Then you have to find the carriage inward. Carriage inward is given the $8,000. So you have to write here. This to be add up with the purchase. Again, sum of the figure return outward, which to be given in the credit side of the tablets. Check it. So it was the 4,000. So carriage inward is to be add up with the purchase. Again, return outward is to be subtracted from the purchase. The figure you got, this is called the net purchase. This net purchase is to be add up with the opening inventory. Net purchase is 15 lakhs 4,000. So this is to be separated from this to be add up. Sorry, this to be add up with the opening inventory. The figure you got, that figure is to be written here. That is 20 lakhs 4,000. Now from that figure, you to subtract the closing inventory. Then you got the cost of goods sold. So the figure is subtracting the 600,000, which is the closing inventory. Subtracted figure is 14 lakhs 4,000. So this is to be written under the sales, and this figure is to be subtracted from the sales. The figure you got, that is called the gross profit. Here it is. This is the gross profit. Subtracting the cost of goods sold from the sales, there we got the gross profit. Gross profit is that 15 lakhs and $91,000. Then you have to check in the credit side of the tablets if there is any income which is received by the business. Maybe the income from discount receipt is given or not, then interest receipt given or not. If it is available, then it is to be written over. In this tablets, you got it. That is discount receipt, one of the item in the credit side. That is 6,000. And another item, interest received, one of the income for the business, is also be added up with the gross profit. So these two figures to be added up. Then total figures to be written over here. That is 16,11,000. Now we have to subtract the all expenses. We have to find it in the tabulance in the debit side. So check the tabulance in the debit side. So all the revenue items, that may be in respect of expenses in the debit side. So that expenses may be the capital expense or the revenue expense. Only you have to be taken the revenue expense. Capital expense with the machinery purchased or equipment purchased or the computer purchase, one of the expense written in the debit side, but we can take that. Only we have to take the revenue item, revenue expenses item. Like this, you to write here less expenses. First item, salary and wages, which is given in the tabulance. Check it, your tabulance. That was $7 lakhs. Then advertisements. So when the company going to be expanded, more advertisement is to be required. So it makes the company to be expanded or more demand can be created through the advertisement. So this is the advertisement check. The 40,000 given in the tabulance. Check it. Now the rent. Rent may be some of the company you have, but you don't own premises. So you can hire some of the places where you can set up your factory. So you have to give some of the rent for that. So this is the rental expenditure, that is 200,000. Maybe the insurance. What is called insurance? Insurance is one of the business through which that business take the risks from the businessman. Maybe business is always uncertain. The goods which is produced by your company, maybe it is kept into the warehouse, but or is caught by fire, or it is stolen or damaged or destroyed. Then time, if you don't make the insurance, the total loss is to be done. So you can't make the mistakes. You have to make the insurance with the insurance company. Once you are making insurance with the insurance company, then any damage is done, later on, the insurance company will fully compensate you. So that figure, it is the insurance expenses, one of the expense that to be treated as an expenses. That figure was the 30,000. Now the rates is over there. Rates or taxes, rate or taxes the same thing. So this also be written as expense, that is $40,000. Then you have the interest expense. What is interest expense? Sometimes you are borrowing from the bank. Bank is to charge something for giving loan to you. So that is the interest expenses. One of the expense that is to be written in the here in the 10,000, the interest expense. Then the delivery expense. Once the goods is produced, that goods need to be reached to the different outlets or showroom. So again, some of the transport cost is over there. So that cost is said as the delivery expenses. This is written over here. Now in the over that end, because the space is not available, that's why it is written in the this end, right end. So we just make over here the 2 column over here, 3 column. You can write it by 2 column. So the first item you see in the tabulance, look up your tabulance. That the discount allowed, one of the expenses. What is called discount allowed? This is important item for the business. Discount allowed sometimes like this to encourage your customer pay you early. That's why some discount is to be given. So this is called the discount allowed. It is one of the expense. What amount you have to receive from your customer, you have to get less amount because you are allowing some discount. So it is one of the expenses. The traditional expense, most of the organization is following there. Discount allowed. Then traveling expense. Maybe the some of the executives, they are traveling inside the country as well as outside the country. Whole expenses to be treated as a traveling expense. Traveling expense is over here. Now miscellaneous expense. Miscellaneous is the various type of expense. It's called the miscellaneous expense. Maybe some of the company is using the what the term. The another company is the another term. The miscellaneous expense, sundry expense, or various expense, all the same thing. Here you see 2 items is written. Whenever I just make the tabulance, this is coming from my own resource. Because all items I tried to include in the tabulance. So over here, miscellaneous expense and the sundry expense, both expense is the expense. So it is written, but same thing. It is synonym. Miscellaneous expense, sundry expense, various expense is all are the expense. Synonym. Different terms is used by the different companies. Now commission paid. Sometimes You are selling your product on through the agent. You are selling your product through your agent. So that agent is subject to given some of the commission. So you are selling your product through the agent. So that agent is to be given some of the commission. So this is the commission paid. Commission paid. Given your table and check it. Now heating and lighting. Heating and lighting, the decoration, maybe every day you are opening your factory or your office. So heating and lighting is over there, eating under the expense. Then the trade expense, maybe the license or other expense is called the trade expense. Then the communication expense, maybe the laptop or other device you are using, maybe the internet you are using. So all expenses is supposed to be said as communicating expense or communication expense is written over here. Then the stationery. What is stationery? Stationery is some small expenses which normally occur for purchase of pen, pencil, paperweight or papers. Like this, it all are said as the stationery expense. So stationery expense is one of the expense written over here, stationery. Then the general expense. Any type of expense can be categorized as a general expense. It is the common expense for the business. Then you see marketing expense. Marketing expense when you are going to expand your business. So your marketing officer is to go different places. So the marketing initiatives can be taken place properly. So that expense is related to the marketing expense. To expanding the business, this expense is related. Maybe the office expense. Office related all expenses included, including the office staff's entertainment or other expenses. Maybe some of the customers are here coming to your organization, giving some of the tea or coffee like that. So it is sometimes said the office expense. With the carriage outward delivery expenses, all the same thing. So once the goods is produced, your customer is ordering you, that goods need to be reached to the outlets, customers' outlets. So transport cost is over there. This is called the carriage outward. Now telephone charges. Every day the company is making a lot of telephone receiving telephone call from your customer. Maybe they are giving some of the order. So there is the operators as well as the telephone bills is over there. So it is one of the expenses. Telephone charges, bank charges. Bank charges is one of the important expenses for the business. What is bank charges? Maybe every day the lot of transaction is taking place in the business, and that transaction, out of that transaction may earn more money or the cash is coming to the business. If it is kept into the business, then it is very risky. That's why whatever the money is generating every day to the business, that immediately be deposited to the bank. So bank is providing you some of the service. That is the bank service charges. So it is to be given. It is one of the expenses for the business. So it is the bank charges. Then administration expense or admin expense. It is one of the general expense, administration. Then the distribution expense. Distribution maybe when the goods is to be distributed, your goods is sold through the agent or the dealers. So the distributor is over there. So some of the expenses related there, it is to be treated as a distribution expense. Then the motor expense, maybe the lot of motor vehicles available in the business for your executives. So that's why some of the expense related to that is the motor expense. Now the royalties paid. Royalties paid means some of the scientist formula you are going to be used. So that person subject to be given some of the amount for using that person formulas. So this is called the royalties. Sometimes some of the book publisher is over there. So some of the author is written some of the book. That books need to be published. So publisher is to be given some of the money to the author. That is called the royalties. Maybe that items may be available. So this is the royalties. Then the fuels and power. Whenever the factory is over there, factory is to be operated through the electricity or other power or fuels. So that is the expenses. Then the bad debt is one of the important item for the income statement. What is called bad debt? You know, most of the transaction which is taking place in the world, it is more or less 95% transaction on credit terms. Credit terms means you are, whenever you are going to sell the product, you will not get the money immediately, but sometime later you get the money. Maybe you are using the 10 days credit terms or 20 days credit terms, whatever it is. But if it is the 20 days credit terms, means you have to get money after 20 days. So this is the selling through the credit terms. So whenever that person going to pay you, some person may be unable to pay you properly or whole amount. Maybe some of the amount, some of the customer is failing to pay you. Maybe that business is going course condition. That's why the company is going to be dissolved. So maybe you got some of the person $5,000. He gave you $4,500, but you have to receive $5,000. So 500 taka he is unable to pay. So that amount, according to the company's policy, this is to be treated as an expense. This is called the bad debt expense. This is coming from the customer. So bad debt expense is written over here. Then another expense is the depreciation. What is depreciation? There's a lot of assets company is used in the factory. That when some of the machineries, fixed asset or non-current asset going to be used, then it's reduce some of the values. So what the value reducing by using that machinery or that particular non-current asset, that is to be said as a depreciation. Maybe one of the expenses. So here written over here, depreciation one of the complicated item. I have to discuss it some of the other lessons. Then the repairs and maintenance. So this is the common expenses for any business, repairs and maintenance. Then the packing cost. Whenever customer is ordering you, then you have to short the order and then it is to be poured into a big packets or make good packets so that it is to be reached to the customer house or customer outlets properly. So this is the packing cost. Maybe the cleaning expense. This is the hygienic conditions. You have to maintain all over your factory or office hygienic condition. So some of the cleaning cost is over there. So that all expenses are written over here in the middle column. So you have to write sum of these all figures. The total figure you got, that figure is to be written under the gross profit. Gross profit under the gross profit, total figure is to be written. The total figure it was, I summarized earlier, that's why it is $15,07,000. All total cost $15,07,000. So this amount is to be subtracted from the gross profit, total gross profit. Over here, that figure was 16,000, 16 lakhs and $11,000. So from that figure, you subtract the 15 lakhs $7,000. The figure remaining to you, that is the profit for the business. This is called said as the net profit. And below given the writing the net profit, the figure is $1,04,000. This is the outcome of the transactions or the operations. So this figure $1,04,000 is to go to the owner's pocket. This is the profit. This is the return of their investment. So this is important for them. If the figure is high enough, they are very happy. If it is the low enough, they are unhappy a little bit. But if it is the negative, maybe sometimes the figure comes negative, then instead of writing net profit, you to write it net loss. So that is not respected by the shareholder or respected by the owners. So this is giving some of the signal to them if their initiative, business initiative is successful or not. So that's all for today. Next class, I have to do the income statement with adjustment. That is very, very complicated. Don't miss it. I am sure enough that lesson will be very helpful. Those who are the O level and A level students, very much helpful for them. So don't miss it. Next video, you have to check it. And once again, I have to say, if the video is enjoyable to you, then obviously make a like and share with your friends. And obviously don't forget to subscribe my channel. And thanks for watching. Have a nice time. Goodbye.